Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those confusing corporate reports. Today's filing has Employers Holdings Inc. Sounds like a place that hires people, right? Well, after going through this report, you might think that the people working there are the ones who need compensation. Let's see if that's true. In this video, we are diving into Employers Holdings' latest quarterly report, a Form 10Q filed with the SEC. We will cut through the jargon to tell you what the numbers really mean, how the company is doing, and what challenges might be ahead. Are they making money? Are they spending it wisely? We will answer that question by the end, and if you appreciate these types of corporate reports that are straight to the point, make sure you are subscribed. We also have a Discord community linked in the description below. Please join that and say hi. This is their report for the period ending March 31 to 25. They filed it using a Form 10Q, which is the standard quarterly report that public companies use. Here's a quick roadmap. First, we'll check the financial statements. Then we will talk about what management thinks of those numbers. After that, some legal stuff about market risk and controls. And finally, the legal exhibits. Let's get right into it and look at the consolidated balance sheets. This is like a snapshot of what the company owns and owes. First, total assets, about $3.56 billion as of March 31, 2025. Just a tiny bit more than the $3.54 billion these times. Now, liabilities, what they owe, $248 billion. Again, very similar to the last year's $247 billion. Nothing scary here either. And finally, total stockholders' equity, $1.7 billion, which is slightly better than the $1.6 billion at the end of last year. Overall, the balance sheet is stable, so no surprises yet. Moving on to the income statement, which shows how much money they made or lost. Net premiums earned $183 million, which is just slightly lower than the $184.9 million from last year. A small dip, but let's see why. Net investment income, $32.1 million, up from $26.8 million. So their investments are doing better than before. But net realized and unrealized losses on investments, negative $12.8 million. A big difference from the positive $11.4 million last year. This is where things get interesting. So their investments are making income, but losing money at the same time. It means the value of their investments are going down a lot. Total revenues, $2,206 million, less than the $223.1 million from last year. That investments loss really hit their revenue hard. Total expenses, $186.77 million from last year. Expenses stayed about the same. And the bottom line, net income, $12.8 million, which is way lower than the $20 million from last year. Ouch! Those investment losses really stung. Earnings per share, 52 cents, down from 1.12. Investors are getting less per share. Now, the cash flow statement. This tells us where their cash is coming from and where it's going. Starting with net income, $12.8 million, but that's not the whole story for cash. Net cash provided by operating activities, that's the cash from their normal business, $14.6 million, which is way better than last year's $14.6, bringing in more cash. That's a good sign. Net cash provided by investing activities, $46.1 million. It means that they had gains from investments from the sales they made. Net cash used in financing activities, negative $28.6 million. This usually means paying dividends or buying back stock, spending money. Overall, net increase in cash, cash equivalents, and restricted cash, $32 million. So even with the losses, they ended up with more cash than they started with. Time to check the notes. This section explains more deeply all the numbers above. Here, it talks about how they value their assets. They use something called a fair value hierarchy, which is just a fancy way of saying how reliable their estimates are. Level 1 is we know the price for sure. Level 3 is best guess. As you can imagine, things like US Treasuries are level 2, not level 1, since they have to use a pricing model for most of their estimates. Also notice that there are things like foreign government securities here as well. Level 3 thinks that best guess is always risky, so there is a special part on the report that discusses them. It seems that a few million of their assets are in that level. Hopefully those best guesses don't end up being worth much less. It seems that the main reason for the increase in net cash coming from operation is because unearned premiums went up, but also the company's premiums are now being collected more efficiently. The investment sections is pretty standard, some ins and outs, lots of percentages, etc. It means that this insurance company is handling the money from premiums and also taking risks while doing that, which they are. Another set of estimates, another place where there can be accounting errors with a lot of money at stake. At least they set aside nearly $20 million on things like this to try and cover those misses. The LPT agreement is an old agreement from the 90s that they still use to adjust their statements, but it's old and it's not material as it used to be, so let's move on. Looks like they have a credit line, basically the ability to get a loan of $25 million, which is nice. A rainy day fund in case they need it. Interest seems okay as well. They call it something fancy, secured overnight financing rate, so FRVs. But it's just the rate they get the loan. Doubt they haven't used this borrowing option at all so far, which is a great sign of self-reliance. Time for the main event. What management has to say. Okay, usual forward-looking statements to cover their butts. Basically, hey, we are doing estimates, so things might change and sue us if that happens. The management speaks a lot about what initiatives they are doing, trying to be efficient, trying to get more customers using modern technologies. That's good and what they should be saying. The main question is if they are truly following through. Management continues to state a lot of high-level things that are already obvious from the financial statements. The board authorized stock to be repurchased. That's good. At least somebody thinks the company is undervalued. A share buyback tends to increase the stock price. Now, risk. Every company has to talk about it. For them, it's mostly what goes up or down, rates, interests, etc. Standard boring stuff. But the company needs to protect itself. Their final remarks are that things are going great. They will keep trying to do things and everything is stable. Well, let's wrap it up with the final verdict. Employers Holdings Inc. faces some challenges. The dramatic decrease in net income because of investment losses in a single year raises questions about how aggressive their investment strategy may be. However, it's still good to see that their operating activities are bringing money in. So, is there anything to be very excited about here? No. Is there anything to be very concerned about? No. Overall, the company is at a crossroads. Let's see if they can take steps to bring those net income numbers back. A good thing, however, is that the numbers appear conservative and the company seems to be handling its investments well. What do you think about Employers Holdings? Are you betting on them to turn things around? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And remember to check out the Discord in the description. Thanks for watching. See you next time.